Hello again, everyone. This is Joe Hentges with Beyond the Chart, and in this technical analysis of the stock market video, I'm going to show you why I think gold may be finally bottoming, so stay tuned. All right, so here's the, we're going to look at the New York Composite today and the Russell 2000 daily and weekly. A look at gold, oil, and a couple other key ETFs and a couple indicators. So let's start off here with the New York Composite. And you can see that it was up 151 points today. Big move yesterday. Of course, the markets were screaming higher after they were screaming lower. So pretty chaotic activity going on this week. You can see it broke this trend line and now it's pulled back to the trend line and slightly above it. But it was an inside up candle today. So it wasn't engulfing. It didn't go higher than Thursday's, trading here. So we're just, trying to figure it out, honestly. And Russell 2000, not nearly as bullish a day on Friday. And by the way, when you look at the activity on Friday, the advancing and declining, the breadth of the market on the New York Stock Exchange was just barely 2-to-1 on a day when the Dow was up 300, almost 400 points. And the advancing volume to declining volume wasn't even 2-to-1. So not a strong day in terms of the internals for a move like what we had on Friday. So here we have with the Russell 2000, you see the bounce back up 12 points. We've still got this trend line that we're hanging here. We've come down pretty hard those 2 days, Wednesday, Thursday, and this looks like just a little bit of a bounce back. Let's take a look at the New York Composite on a weekly basis. The Dow, the S&P 500, and the NASDAQ all have basically doji bars. They were almost unchanged for the week. The New York Composite was actually down for the week, down 41 points. Let's see, where is my Russell 2000 for the week? Down 8, almost 19 points for the week. So pretty bearish looking candle in here. Well, it's, and actually it was an outside down day, not engulfing, but an outside down, candle for the week. So it'll be interesting to see what kind of follow through we get. That's going to be key on this. All right, let's take a look at a couple of indicators here on the New York Composite. I'm going to go back to McClellan Oscillator. And we got oversold down here on Thursday, and now we've gotten a bounce back. We did not get extreme oversolds below minus 150 like we did back here in November and like we did in August at a really extreme. And so now we've got a little bounce back. I like to think of minus 50 to plus 50 as kind of the neutral zone. So now we're kind of back to the lower end of the neutral zone. And the other thing that's interesting is high-low indicator. Let me zoom in. I'll come back to that in a minute. But so here we had a day up almost 400 points in the Dow, and we had 154 more stocks making 52-week new lows than new highs. So there were 154 more new lows than new highs for the day. And you can see it broke this little trend line here. So again, the negativity, and even with all the rallying that had been going on over the last month and a half, 2 months, it never got barely above zero in terms of net new highs, new lows. So not a bullish picture that this is painting either, I don't believe. All right, let's take a look at, that's the two indicators I wanted to look at. Now let's take a look at oil and gold and see what's going on. Oil continues to be bearish. I talked about this last week, how the bearishness, how the bears took control during the week, how the bears took control during the week, and then, wow, here we go. And of course, we had the OPEC meeting on Friday, and I don't believe anybody decided to do any production cuts. Everybody wants the money. And so here we got the low, 12.37 back here on August 28th, and we just slightly broke it, 12.33. This week, and pretty bearish looking candle. Looks like the downtrend is continuing. Let me zoom out of that for a minute. And we're, of course, on USO, we're at all-time lows on USO. And gold, I think gold has got a real good probability that it's just, we just put in a bottom here. Now, we need follow-through to confirm that, but here's why. We have a resistance zone in here between 99 and 100.5. got this bullish candle. Look at this bullish candle here, a reversal candle for the week. This is a weekly candle that we're looking at here. If we look at for the day, and I'll come back with the Elliott wave count here in a minute, on a daily basis, you see the last 2 days, pretty good bounce. You know, you couldn't tell what the market was doing based on what gold's doing, right? Okay, so on this day, the Dow's down 260 points or so. On this day, the Dow's up 380 points. So, you know, gold's doing its own thing. So now we go back, let's take a look at the weekly, and we'll zoom out of this. My Elliott wave count, this looks like we've got a huge complex corrective activity going on. And, you know, we had a zigzag, then we had a three-wave kind of intermediate connecting corrective wave called X. So we have a WX, and then we get another big zigzag that really is an A, B, C. Now, this classic triangle right in here is a B wave. Big triangles always occur from an Elliott wave perspective in the B wave or the fourth wave of an impulse move, okay? Well, we don't have any impulse move going on right now. We're correcting. Now, this is the final. So here's wave. This is the B wave. And then now we've got a C wave coming down here. And this is like an ending diagonal pattern. You can see how the diagonal, the lines are you know, closing in together. I'm trying to think of the right word there. But anyway, we've got a wave 1, 2, 3, 4, and 5. And it's real interesting. Now, it's always possible that this could still come down a little bit more and do a throw over to the downside into this support more. But I find it really, really interesting that literally the low in here was right at the top end of this support. So I'm talking about support. Where is that coming from? Here's where that support's coming from. It's from back over here in 2008, the high in March 2008, 99.5. And it might be 100.4, so about 100.5. We had another point in here where I took a dotted line across. And so these key points in here, I said, well, let's bring it across as a potential support zone. And it sure looks like, you know, that's what's going on. The low in here, 100.53. So again, we need follow through. We need closes above the moving averages here. And in case you don't follow me, you haven't followed me closely or whatever, I use the 10 exponential as my very short-term trigger line, and then I use Fibonacci numbers for the others. 21 for my kind of the intermediate, or actually it's more of a short-term, and then intermediate is 55, and then my very long-term is 233. So that's the picture on gold. Let's take a quick look at the high-yield bond fund. The high-yield bond fund is topping out. Look at this huge head and shoulders that it's done over the last couple of years. Still projecting a lot lower, and it is continued. This is a weekly chart. This has continued to trend down and showing a bearish picture in here. Risk off. Okay, so that is, and it's basically been leading the stock market down. And then the last one we'll take a look at is the energy select sector. And look at this bearish candle on the weekly chart here for XLE, and it just has a bearish looking picture. When we go to the daily chart, we've got a little head and shoulders consolidation pattern. It's really interesting that on Caterpillar, which is heavily influenced by what's going on in the oil sector, you see the same exact thing. Chevron, I'm also watching very closely. We see the same exact pattern. And this broke down starting on Thursday. So looks bearish, looks like it wants to make another move to the downside. We'll see if we continue to get follow through. All right, everyone. If you want to get the full analysis that I give my insider members and my Elliott wave count that has been pretty doggone accurate. I've had the same Elliott wave count for months, if not most of the year, and it's been continually reinforced. Head on over, check out the membership page on the website here, joehentges.net, and become an insider member. Everyone have a great weekend. Talk to you soon.